Hi everyone, welcome back to this new setup. So as you see here, we have a very strong engulf. So in this setup, we need to just have one strong break, okay, which is making very traditional strong setup. It could be two candles as well. The break is important. So this should be aligned with the higher time frame. So it should be in the extensions of higher time frame. If you look at this trend here, so we have this trend and this engulf should happen in the extension leg and here, and if you're just taking it in the pullback, it should be in the very beginning. So because we want to just have higher probability trading, and you have to just close, you have to have good management, and you have to exit from the trade as soon as you feel like momentum is exhausted. So this strategy, this setup could be a standalone strategy. So it is aligned with whatever RTM or uh, Bystra setups are, 1, 2, 3, and even 4 and 5, which is about QM. So we'll see them in the future as well. So this one, the very first thing is that the most important part is that we need to have the engulf. While in that setups, while in those strategies, they are just putting engulfing as confirmation. While here we go from engulfing to TBT. So what is TBT? TBT is trend base trend, or uh, extension pullback extension. Okay. So these candles, okay, if we have this break, uh, not only we have this momentum of this trend, okay, this trend is created by the momentum, which is order flow here that pushing the market up. This break also was created by momentum, okay? So we have some buyers here, we have some buyers here. Now we're gonna just go to inside this like so. How do we do that? This is the very important part that if you miss it, you cannot use this one. Now let's imagine this is 4H, okay? So the first thing is that you have to drop one time below, one time frame below. Usually you cannot see any base trend, or leg pullback extension, or I mean extension pullback extension. But why? Because we have a strong momentum. So if it is H4, usually in H1 you can't see any extension pullback extension. So you go to 15 minutes. So you would see one or two pullbacks, okay, or base. Now that's the point that you are interested in, okay. It doesn't matter. You could use this one, and this one could be even 1 minute, okay. If it is 1 minute, so this extension pullback extension could happen in, let's say, 5 seconds, okay, because of the momentum. Now in the lower time frame, so when you do that, we just drop one time frame below, okay, and you will see this retest will come here. We don't know if this retest is from here. Sometimes this retests here, sometimes this retests here, sometimes it retests here. So we're going to narrow down where it's going to retest. Sometimes it's retesting here. So how do we do that? By using this idea of extension, pullback extension. See, this one, if you go, this is the leg. Let's say this is 10 minutes candle. These are 1 minute candle, okay? So 10 of these candles are here. We have one rally base rally here, another one rally base rally here. So now, which one should we consider, this one or this one? So I cannot say that always take the lower one. Lower one gives you the higher RR, but sometimes when the momentum is high, price comes back and retests this one and goes. How are we going to filter this one down? In the other setups, other confluences, which is break even or most recent high low and V and A shape, you're going to see that they're going to be very handy. But this one is the very basic. If you can understand this one, all the other setups, like 5 following setups that they will come, they're going to be very easy for you, okay? So this is the foundation. So even if you don't know them, automatically if you're obeying these rules step by step, it means that you are taking those setups without even being aware of that. So now among this space and this space, so before it goes on, we consider this space, okay? So it retests the space. We have liquidity here, also liquidity there. Sometimes it sweeps it, okay, and takes the enough liquidity and consumes the liquidity. It needs to break this high, okay, and continues its, direction, okay. So what happens later? It goes on and on. As you see here, we also have another engulfing, okay. So the same story. If it comes here, we're gonna just go 1 or 2 time frames below, okay, to find a rally base rally, rally base rally. Okay, the very first rally that you can see, let's say you see rally here, there is a base here. This is also base here. So although you are not familiar with most recent high low or break even, let me just tell you that this is, if we consider the in the uptrend, when we break this one, okay, if we consider the high of the candles, okay, this high of the candle in the uptrend should be higher than the prior one, and the prior one should be higher than the prior one, and this one should be higher than the prior one, while we see that it is not the case. So in that case, we call this one is break-even point. Why do we call this one break-even point? The reason is some people here, before these three candles were created, so they're expecting price, they see something on the left, and they're expecting price to go down, and that's why they become sellers. So when they become sellers in the top of this move, okay, they put their stops here, there, or even sometimes because they're institution, they don't have any luxury of having a stop loss. So they become, they go to draw down. That's why they try to inject liquidity and drive market back to their entry point. Okay, so entry point of sellers. Okay, in that case, they can get rid of their positions, and that's why price not only comes to this break even, and this base, the closer base to break even, is providing their liquidity. Okay, to go to drive the market again. It goes up and up. So that's why these two confluences, which is based on the liquidity and order flow, so will help you decide where exactly you're going to narrow down your entry point and level. Okay, so let's go and have some examples, real examples on the chart, and I will also have a lot of these trades. So first, I'm going to do it very slowly. Later, I will be very fast and quickly. I'll explain that. Just let's move on to the chart now. Okay, now we are on the chart. This is 1 hour chart of the gold. Now here, as you see, we have some engulfings. Okay, so we need to have, as we said, that it should be an extension. Okay, we should have some trendish movement. If it is going up, it should be trend these legs that they are aligned with that. And if it is going down, although it is not fully down, but it is a little bit down, let's go and uh, dive deep into one of this. So from, for example, starting here, okay, these two, and we will go backwards. So now consider this engulfing. Okay, we said we need one engulfing, which is engulfing here. So this is created by two candles. That's fine, no problem. So from here to there, okay, we don't have anything. This is our GAN leg, if you can remember. So this part to there, it is our GAN leg, which without having any base inside. And also even there, from here to there, okay, okay, now these two. So let's go, and we are just dropping one time frame below. This is I mean, the momentum here is not very strong, so don't be surprised if we go just a one time frame or two time frame below right away. We can find that one. So we're in 1H. Okay, no matter, you can just drop slowly, drop down slowly. Go, you can go to 30 minutes time frame. Let's see what we have in here. So do we have drop base drop here? Nothing yet, because it is so close to 1H. M15, let's say, to that one. Okay. Now, the very first time frame that shows our drop-based drop, that's fine for us. Now, okay, this is it. So before this movement happened, so we didn't see this one. We couldn't see here. Let's see. If we were here, uh, yeah, if we were here, so we didn't exactly know where to just get into train. Some people would say that, okay, this one is a gap level. No, it is not like that, because it doesn't work. The market doesn't work based on candles, close, and I don't know. These are just packaging of timing package. Okay, so now this one, let's go to this one here. So it would this one happens inside this one. So for example, some people say that this is the gap. Okay, so if it doesn't fall into the gap, they say, oh, it must fair value gap. No, it is not like that. So it should be based on the liquidity. Now, if we drop, let's go analyze this one. So we have one engulfing here and one base here in the lower time frame. Now we have one engulfing here, the leg momentum candle. We need momentum candle. Now let's go one time frame below. Nothing, as we saw previously. Again, another time frame below. Now this base happened here. Right away, 1, 2, 3, 4 bounces out of it, right? Now, if you want, you can go deeper the time frame. I mean, even you can go down inside this time frame here. Okay, let's dive into this one. So some people would say that, oh, it was, yeah, fair value gap or imbalance, whatever. So let's dive into this one. We have this engulf. So let's consider this engulfing candle. And we go one step at a time. Nothing is here. Okay. So far, nothing very visible. We don't have any drop-based drop in 15 minutes. M5, but we have this V shape. Now let's move one more time. The lower time frame. Okay. Now here we have this drop base. This is base. This is another base here. And the one which is coinciding with our engulf, I mean A level or V level, is more valid. And also here, we're going to go back to the, okay, this is our retesting zone and sweeping it. Look, now, as I said, sweep. So, and if we go to original time we had, we can see if we have most recent high or low here. Yes, this is our, from here, if we come, our most recent high low is this level right here. Okay. So this was as well this one. Now let's see if we have something here in this movement. This is pullback, but it works everywhere. Okay, now this one, we have this candle and engulfing happened the second one. Now let's drop one time frame below. Let me just mark the engulfing zone. This is our engulfing zone. Okay, now if we go to lower time frame, nothing out of engulf when it comes out. 13 and 15 because liquidity is, or let's say imbalance difference is not that much here. I was expecting that we could have one drop base drop before that one. So our base is here now. And our reaction was here, then it was holding the price up. Now let's go back and you'll see. Okay, in the higher time frame, this happens. Now in the higher time frame, if we are just tracking back there to find the break-even or most recent high low, this is the exact point that we have. They're coinciding. Okay, so let's look at this one. If it is going to go down or not. So this one. So we have this engulfing candles starting from there to there. This is our liquidity zone, sorry, engulfing zone. And let's break it. Nothing yet. Nothing yet. In M15. Okay, now we have this movement down and we have this base here. Okay, now it is more valid when it is coexists with this swing low break. Let's go back to original time that we were. What is our most recent high low? So this low is lower than this. This low is lower than that, but this low is not. So our most recent high low is here. So price didn't come to the most recent high low. So this is what we call trading. We cannot, there is no way around it. So, and if we go to, do more back testing, one more candle, let's see, it didn't come at this place at all, but let's see where this reaction is to. Okay, somewhere around here, here. So we're gonna have this one, this reaction. We're gonna go, I'm going to drop to M15 because we don't have anything on the way. Let me go to M30 first. Yes, we have a very small one. And M30, this is the pause. So it had its own reaction there. And we have this one, M15. So which is going quick side with, okay, this one is our second one, second base. This one is our last base, these three bases. The middle one, I guess, no, the last one was the one which is reacted to, the price reacted to. Okay, now if we go back to our original time, let's see which one we have. Most recent high low. Yeah, most recent high low also falls in here. So this is our most recent high low, and you have to just be mindful that we took 1, 2, 3, 4. It took 4 candles to just break this one. That's why the lower the momentum, the lower the retesting zone usually is. Okay, I hope it was helpful, and I could explain a lot of things. So I'm going to add more examples to this one with live trades and how to take the trigger here. See you in the next part and the example one.